Welcome to the chat. So this is exclusively for position traders that set up their trades for months and even years. So how do you identify zones that have the highest risk to reward? How do you identify zones that offer the best opportunities and the zones with the best probabilities? So here we are going to learn how to identify these zones for the month. We are going to identify how to look out for these zones and set ourselves up for winning. So seeing these zones, then you are going to have the preconception of where the probable trend is, and if you cannot identify these zones, then you already have the conception that price is probably going to consolidate for the month. We need to know that at all times price does two things: either price is in a consolidation or either price is in a range. So that is the essence of swing points. Swing points in technical analysis, they enable traders to identify zones where the market is going to reverse from. They enable traders to identify zones of correction when a trend is going on, and probably when a trend is in a range accumulation phase and about to kick off again. With the swing points, you are going to see these zones clearly on the chart. So today we are going to learn how to identify institutional zones, as we know that the large financial institutions, they are the ones that control the market. They are the ones that determine who wins and who goes home with a loss. So let us get straight to business. As this is an advanced strategy, we are not going to be delving into the basics. We are going to be going straight to business. I'm sure we know what engulfing patterns are, as there are two variations. The first variation, we need to see three candles at most, while the second variation, we need just two candles. So right here in the first box, we have marked a variation, and the second box, we have marked another variation. You can see right here that there are three candles. The first candle a buy candle, the second candle a sell candle, and the third candle a sell candle that totally overshadows the first buy candle. And the second variation, the first candle a buy candle and the second candle a sell candle that totally overshadows the first candle. So we are going to be working with these technical instruments on the chart. So how do you identify the swing points of a month? How do you identify the swing highs and the swing lows of the month? It is very simple and straightforward, and right here on the chart we are going to be learning how to do this in real time. We are going to learn how to spot this in real time. As you can see, for this particular month 2002, you can see that at the low there's no specific swing point, and what happened, you can see the price was ranging before the price broke out to the upside, and at the top here you can see a swing point. Even though price did not respect it, however, it's already signaled to us that price would probably be in a downtrend, and you can see later the coming months price obeyed and went in a downtrend. So for January 2002, the swing high is right here. Price did not respect it, but you can see the following month price created another swing point, as you can see this strong candle here at the high. So mind you, to identify the swing point on a monthly, you just need to do two simple things. The first thing is to identify the high and the low of the month, and at the high you want to see a swing high which must always encode a strong pattern, and at the low you always want to see a swing which must always encode a strong pattern. So you can see right here at the swing low we have a strong pattern. Likewise at the swing high we also have a strong pattern. So you can see price retested the swing low, went and retested the swing high before price dropped. So as a position trader, knowing how to identify these swings will put you in a better position to position yourself in the market. Right here we can see at the high of this particular month we have a swing high there, and at the low we have a swing low, even though the swing low was not respected but the swing high was respected. So that is the beauty of identifying swing points. You would have the preconception of where price is likely to go, as we know that trading is all nothing but a business of probability. It is all nothing but a business of speculation, and we do not determine what price does, but with a critical understanding of the chart we would have a pre-notion of what price is likely to do. So let us take more examples to broaden our knowledge and sharpen our focus in regards to this concept right here on the chart. So for the month of July 2002, you can see the swing high, you can see the swing low right here. So these swing highs and swing lows, they are very easy to identify on the chart. All you need to do is look at the highs and lows, because the institutions, they always do what? They buy low and they sell high. They buy at a discount and sell at a premium. So these are the zones you need to look out for and see the reaction of price. So still on USD JPY, still on USD CHF 2003. So you can see as far back as 2 years ago, over 2 decades, you can see the price keeps doing the same things day in, day out. Price keeps doing the same thing day in, day out. On your own, to broaden your knowledge, mark the chart, learn to identify these points on the chart, and I promise you this will be a game changer to your trading. This is the swing low. You can see price respected before price broke it. So swing points, they are indispensable in technical analysis, and right here we are taking more and more examples, as we cannot have too many examples. The more examples we take, the better our understanding. You can see the swing points right here. So as position traders, once you are able to identify this, then you'll be able to mark the zones you are expecting price to bounce off, the zones you are expecting to hold. Regardless of your strategy, being able to identify these swing points is vital to a position trader's trading analysis or trading style, or whatever the case may be. So always at the high and the low, that's where you want to spot them, and you can see that is exactly where you are spotting them. Let's also look at the swing points of current month on different currency pairs. See right here on USD CHF, we do not have a very strong swing point, so we'll be expecting USD CHF to be accumulating for this month, as there's no strong swing yet. In USD JPY, you can see a swing high, which indicates that the USD JPY probably will be in a downtrend sometimes of this month. On Euro USD, no specific swing yet. So that's just the beauty of it. So for the month, you are going to have a few of what price is likely to do. On GBP USD, you can see a swing low, which indicates that price is going to be attempting to rally up. On USD JPY, we have a swing low here, which also indicates that the USD JPY is going to be trying to buy to the upside. On NZD USD, on the monthly, we do not have a specific swing yet. On Euro JPY, we have a swing low, which indicates that price is going to be trying to buy up. On USD CAD, we have a swing high, which indicates that price is going to be selling down. You can see it right here. So as a position trader, seeing this, you would know where to key in your moves. You will know the moves to anticipate. On gold, we can see a swing low, which indicates that gold is going to be buying up. On silver, what do we have here? On silver, we can see a swing high, which indicates that silver is going to be selling. On GJ, You have a swing low on USD CNH. We do not have a very strong swing, although it seems to have a swing low. On BTC USD, we have a swing low right here, which indicates that price will be going to the upside. So that's all for that. Win today, win forever. Plan your trade your plan, and most importantly, manage your risk and emotions. If you find this useful, like, share, subscribe, and follow for more.